Hello, everybody. Hello, friends. My name is Kevin R. Smith with Investment Planning Council, thesmithteam.ca, and today is Monday, August 24th, 2015. This Monday, we're rather active news day following some active news days at the end of last week, originating out of China with their stock market severe correction inside mainland China. And I just want to give a little context and share some of my thoughts with you about these days and these events and what they might mean. First of all, it's worth mentioning that the internal Chinese stock market in the less than the last 12 months had risen well over 100%. Since June this year, more than half of those gains have been erased. Now, this market in China that I'm referring to, these markets in China I'm referring to, are not markets that the rest of the world participates in. They're internal markets for Chinese-only investors. They are also highly manipulated by the central government in China. And clearly, the manipulations that they've been doing over the last less than 12 months have resulted in a bubble building, and then that bubble bursting. Interestingly, the other Chinese major market, the Hang Seng out of Hong Kong, which is not manipulated by the Chinese government, and is participated in widely by the rest of the world, has had an experience very different than the markets inside China. In fact, the Hong Kong market's behavior has been much more like the rest of the world's behavior. Now, what I believe is happening at the moment is, as the internal Chinese markets adjust in a big way, the rest of the world is feeling some element of fear that's spilling over into other markets, including our own. Now, it's worth talking about or realizing what's actually going on in the rest of the world, and also what's actually going on inside China. The rest of the world, meaning the United States, Canada, Britain, Europe, and other developed markets, have been having an improving economic situation, with the exception of Canada, whose headwinds are there due to the steep decline in oil prices. Now, in fact, China itself, its growth is still a healthy positive, roughly 6%, which granted is a reduction from the 10% that we were seeing a few years ago, but the volatility in the Chinese stock market is unlikely to affect the overall growth trend of China and in China going forward. You see, the Chinese government controls what happens inside China, and the Chinese government has an enormous capacity to influence what happens inside its own country. Chinese government has a huge amount of reserves that it can call on. If it wished to, it could launch another round of robust stimulus if it needs to. My thoughts on this, my feeling on this, is that the Chinese government at the moment is more concerned about how to manage the expectations of its people than it is managing the growth of its economy, which I believe will continue to grow for the foreseeable future. However, as an emerging market, China's growth, I expect, will be at times ugly and uneven. Now, this isn't the first time we've seen a market correction. If you've been dealing with me for any length of time, you've likely seen several of them. However, this is the first meaningful market correction in more than 3 years. We've had a very long period of low volatility and positive gains. And corrections happen more frequently than what we have been experiencing over the last few years. So this one is, to say the least, due, a little bit overdue perhaps, but they happen, and they're not unhealthy events by and large. If you've been dealing with me for any length of time, you've seen this before. Many of you have been dealing with me through the last crisis out of Asia, which was 1997-98. It was brief, it was scary, and then the markets rebounded strongly. Many more of you were with me during the tech bubble and subsequently 9/11, which led to what at the time was the worst market event and recession since the Second World War. And again, behaving rationally throughout that period, we got through that, you and I, just fine. Many, even more of you have been with me through the financial crisis of 2008 and 9. Now that crisis was the worst for the economy and the markets around the world since the Great Depression. In fact, you've probably heard me describe it as our generation's equivalent of the Great Depression. And yet again, rational behavior based on rational thought resulted in an outcome that was just fine. This, like I say, is the first meaningful correction in the last 3 years. I don't expect it to rate anywhere near as bad as the last two. However, the fear may be elevated for a period of weeks, maybe months. It's important to remember that we have to have faith, or we should have faith, in our managers and our processes that they're following in order to manage risk. In fact, they use times like this to adjust their portfolio in expectation of a return to growth. And the worst thing that we can often do is to take the tools away from those managers, lose faith in those processes, and panic. So rational thought is what I'm going to be talking about now and in the near future. And I'm going to have faith in the managers and the processes that have seen us through difficult times before, and let those managers position the portfolios towards future growth and better gains ahead. Thank you very much, and I look forward to talking to you in the near future.